Welcome back to the SteadyTrade Podcast, everyone. Tim Bowen back with Matt McCall. Listen, we got to go back to last few weeks' episodes. We've been talking a lot about volatility, and, we mention it a lot because obviously Matt and I have been in this a lot, but a lot of people want to know more about that. So how it relates, what causes it, etc. So we're going to talk more about volatility and kind of what we see going forward in our two different approaches, because most of you know, or maybe this is your first episode, I'm mostly short-term trading, day trading, and swing trading. Matt's a little more longer-term bias, and I think it's a great great topic for today, because if you were here last week, it's just wild how volatile the small cap market is right now, which is a good thing. Remember, when we were recording last week, I talked about a stock GNLN that was up huge. It was kind of spiked up big. And later, after we ended the recording, it actually doubled again. And then later in the week, another stock, CING, that was a stock, they released a ADHD press release, up massive, okay, I think 400% or 500%. And then just to recap, one more, ALZN today, they dropped a press release based around a phase 2 clinical trial of a PTSD treatment. That dropped this morning about 8 a.m. Currently, the stock is up 508%. And actually, kind of as we're recording, looks like it wants to make a secondary run into the close. And that just kind of goes back to when things get more volatile, it doesn't just affect the big stocks, but it also translates over to the small stocks. And then the last couple things, a lot to go over today, is I'm sure many of you have seen we're right in the early throes of the monkeypox hysteria, okay? And I want to get Matt's opinion on this because, especially in day trading land, we've seen this over and over and over again. We saw it with COVID, before that, Ebola. And it just kind of repeats and it repeats, where you'll see there'll be a small handful of stocks pop off early, and then everyone starts piling into that trend. I'm sure many of you remember it from COVID, where all of a sudden a lot of these biotechs and companies were saying, hey, we have COVID devices, we have COVID treatments, we have protection gear, etc. And they just became massive runners. And we're seeing that going down right, literally right now with monkeypox. So welcome back, Matt. How's it going?
Good. Thanks. Yeah, good introduction there. I'm with you in the volatility. Just notice, I was looking at two of those stocks, the last two you mentioned here that were moving, they both had reverse splits in the last week or two. Does that have anything to do with it? I just saw it pop up on there.
Yes. Nice. Way to cheat me up, man. So what is interesting, and this kind of gets into the inside baseball of day trading. So what these stocks do, and actually today, FFIE, keep an eye on that, guys. Faraday Future. You go back to last spring, that stock went on a massive run from like 17 cents to $4. And what this playbook is with these stocks is, they're terrible companies. Okay. They're terrible companies. They fade into oblivion. MULN, okay, Mullen Automotive may be the king of reverse splits. Okay. I think they've done 500 of them, exaggerating. But what happens with these stocks is, they fade under $1. They start risking the chance of being delisted from the NASDAQ, which is the last thing they want, because if they get kicked down to the OTCs, the OTC market has been dead for years. No one cares about it. So if you know how to play this game, which is a game I've been playing for 18 years, there is literally a playbook where you can see these stocks play out and you know what they're going to do. So the first indicator is the reverse split, drops the float down, increases the share price. Couple days later, they drop the PR. That's when we target them. And then we just day trade them because we know ultimately the dilution is coming. And it's a cycle. MULN is the king of this. They have done this, I don't know how many times over the last few years, but when they run that playbook, you can day trade them all day long.
So it's funny. Faraday is a company I've followed for a while, even before it was private. Yeah, it could be one of the worst publicly traded companies on the NASDAQ right now. I mean, the fact it's still worth anything, $44 million, give or take, is surprising to me, because I think it's worth nothing. I would actually argue
with you there. Yeah. In my opinion, it is funny, they're both electric vehicle plays, but MULN, Okay. If you look into the history of that company, I would put that up in my 18 years of day trading crappy penny stocks. That one's at the top of the hill, like the most scammy, like the executives are allegedly the worst people. Like, I mean, it's just an absolute disaster, but it's funny that it's been very day tradable for years. So
yeah, like Mullen to me is not, I mean, I don't even consider that a company. I mean, split adjusted 2014, it was trading above $9.5 million a share, and now it's at 24 cents. I mean, that's... You're down 99.9999999%. You lost all your damn money. All right.
See, and just to comment on that. So guys, if you look up these tickers, and this trips up a lot of people that are new to this, and we have a diverse audience, but I think a lot of people kind of come here because they're getting educated on trading. When you see like a stock, you look at the long-term chart, it's like $100,000 a share or $9 million a share. Understand it never traded at that. That is a mechanic of that reverse split, because what the exchanges, what they have to do is they have to adjust the chart to reflect the fact that this stock just keeps going lower and lower and lower. So it never traded that high, but it's a mechanic of trying to chart out these stocks that play this game again. So there's going to be more and more of these, because basically right now the NASDAQ is talking about tightening these regulations and shortening the time period that they can stay under $1. So it's actually, I'm glad you brought it up, even though it wasn't really on the agenda, because you're going to see more and more of these, because the last thing these companies want is to get kicked down to the OTCs, because that's death. Like, no one cares about the OTCs anymore, and they can't, raise money. They can't get people to trade them, etc. So you're going to see more and more and more of these. But think of a reverse split. It's just the opposite of a forward split. So when NVIDIA, is trading at $1,000 a share, and they expand the float to reduce the price, it's the market cap doesn't change. And it's the same with the reverse split. It's just in reverse. So they push the stock price up so they don't kick off NASDAQ, and it's just a game that they play over and over again. But you'll see that these biggest explosive movers are reverse split.
Anytime I see a reverse split, and I've had companies that have owned back in the day long term that didn't do well and did it, it's usually kiss of death. Very rarely do you reverse split and end up being a successful long-term company.
Yeah,
it does happen. It does happen, but rare.
I think someone gave me an example a while back, and I basically challenged people. I challenged them to find me a good company that did a reverse split, and I can't remember the ticker. Somebody gave me one, but it was like, I asked like thousands of people, and like one guy found one.
Yeah, so we're in the business of playing odds, right? Short-term, long-term, odds aren't good. If the company you're following or you own does a reverse split, next rally, get out of it. Or if you're not in it, don't buy into it. I mean, unless you're day trading, because it's just not a great long-term investment at that point. You mentioned the short-term, how trading's been more volatile this month. And typically you have it in August month, which is usually the last month of vacation, not as much going on Wall Street, etc. A lot of people on vacation with their kids, but going back to school soon, so you should see that volume pick back up. And then you look a bit, I wouldn't call it long-term, more intermediate term. We have the Fed rate cut that's basically baked in middle of September, so that's a month away. We have the presidential election, which we know is going to happen first week of November. And then, August, September, typically two of the worst months of the year, historically speaking. So we got 6 more weeks of that left. You add that all together with geopolitical stuff going on. You talked about the Mpox, not monkeypox anymore. It's the Mpox. I guess the monkeys got pissed. So it's just the Mpox.
Hey, man, I'm still going with monkeypox. You're not going to change.
You throw it all together, there's a lot of stuff that will keep volatility high, in my opinion, both on a daily basis and long term.
Yeah, and speaking of like monkeypox, when it comes to even longer term holds, when I mentioned that playbook, like a lot of people don't remember, but at the beginning of COVID, Moderna was a $15 stock, okay? And I'm not saying this is going to be, at least I hope, this isn't going to be the exact same playbook, but you think about some of these stocks that had multi-year runs into these types of things, and Moderna was one, all the way to they had hit $500 a share at one point, and that was one back at the beginning of COVID. That and NVAX that I was talking to people about, that, if they continue to beat this drum, people are going to rotate to these stocks.
Yeah, there's one that I always go to, going back probably about a decade now or so, that tends to have spikes. I had one at the end of 2009. I can't remember what that was. It had a spike in end of 2014, and obviously the COVID spike, and that's Alpha Pro Tech, which is symbol APT, which so makes protective, protective gear for medical professionals. So, obviously during COVID, more masks, more stuff for the doctors, bouffant things they put on their hair, everything. It makes all that kind of stuff. So, but it's funny if folks out there, and we'll put a chart up of this though. I mean, it's very distinct spikes. And when it spikes, it goes up, 5x, 10x. COVID, it went from $3 to over 40. I mean, you have some pretty massive spikes when this happens. And you can see just in the last 2 weeks here, Tim, the stock bottomed out early August around 510. It's hit a 5-month high today, 6.25. So I don't know if it's just a bounce back with the market, but it's had some decent volume coming into it. And so maybe there's a ties to the monkeypox with that. There is that, and another one called Lakeland. I don't know if it's still a trade. So it's Lake is a symbol, Lake. Yeah. Look at that, for example. That stock's hitting a year high today. Big volume, really? Biggest volume we've had in 6 weeks. Yeah.
She slid under my radar because, I remember that name as well.
It's a higher price stock now. I don't know if it actually grew. Well, if it had a reverse split or not. It doesn't look like I can find one on my system. But yeah, it's a $25 stock now. But again, you look back, 2014, it went from $4 in 2013 up to nearly 30. You had a COVID spike from 10 to 48, and now you're getting a spike again. So, like you said, the playbook's easy. And these are two companies where, if I were to do this on a swing trade basis, probably not a day trade basis, a swing trade basis, Tim, I'd probably look at one of these two or something similar where there is a business model there. It's not a biotech that has no hope at all of ever getting anything improved, right? Like zero hope. They have no money.
Less than zero. I could probably cook up a better remedy for monkeypox in my hotel room sink than any of these biotechs could.
I'm not quite sure I'm taking it, but I believe you. I believe you. I believe you. Well, yeah, I think that's interesting you brought that up, because I think now after COVID, people have become numb to some of this stuff where, like after 9/11, everybody's on edge, especially being in New York City. But then after a year or two of thwarted attacks and nothing happening, when something come across that was terrorist related, the market didn't move as much, right? Because you become a little numb to the headlines. And I think that's how, I think COVID just drove so many people crazy that we've become so numb to these types of headlines now, unless something dramatic happens. A few cases here and there isn't going to really get us going. But the stocks are clearly moving. Somebody's positioning themselves for a potential move. So, maybe smart money knows what the hell they're doing here behind the scenes.
So enough about day trading crappy penny stocks. I've dominated a little bit. So let's go back to your read on this volatility and how that's going to affect, some of these longer term holds, what people should do during this period. You mentioned some of the worst months, et cetera. So.
Yeah, we've had some big moves already. In the first half of this year, we had 4 one-day moves of 2%, either direction. And then this is for the NASDAQ 100. We've already had 10 of those so far in the second half, just through last week. So obviously a lot more volatility coming in. We had the S&P, which was down 2.3% on the 24th of July. It was the first one-day drop of more than 2% going back to February 2023, which is pretty crazy because that's a streak of 356 trading days, not days, trading days, without a 2% drop. That's a long time without having that. So I think people got a little accustomed to not having this volatility come in. Obviously, we talked already too much about the VIX the last couple of weeks, what happened there. But this is one, Tim, I thought that you'd find pretty interesting. Investors Intelligence, they do a sentiment reading with financial newsletter writers, which is like us. They saw the biggest 2-week drop since 1987. We know obviously what happened in 1987, Black Monday, but it fell 17.3 percentage points. At the same time, you looked at the AAII, which comes out every week. They do sentiment, but they do it with individual investors. Their bearish sentiment saw the biggest 1-week jump in about almost 2 years. So you're seeing this kind of fear coming back into the market. And I got to tell you, I've been in newsletter business for 20 years. There's not a lot of good newsletter writers out there. I'll say that. There's just not. And there's a reason that we're still around. I've been around 20 years. You've been around 10 plus years. Like, there's a reason we're still here. They're not good. So when I see the masses of my peers going one way, I'm going to go the other way, and they're negative, right? So I'm going on a more positive side right now, longer term. And then if we look ahead, Tim, looking kind of where I think things are going, over the last 50 years in the Dow, the average declines in, like I mentioned, September. August declined about 1/3%, but September about 1.3%. So it's historically, it doesn't mean it's going to be a bad month, but historically it has been a time where you're going to see some choppiness at least going forward. And, for just the 16th time since 28, so, basically Great Depression, the S&P declined by at least 7% from an all-time high, which it did, remember, 2 Mondays ago. In just under 4 weeks, it did it very quickly. And when that happens, typically we see a snapback. So the S&P, after that happens, the median return over the next 1 to 3 months is 4.5% and 6.1% respectively. So usually when you have that quick downturn, Tim, we come right back up. So there's a lot of numbers right now that are pointing me towards increased volatility, remaining and maybe even increasing more, and at the same time, buying opportunities into companies that I think are really great long-term companies. Taiwan Semi, we talked about how that got crushed and now back near an all-time high. Super Microcomputers got crushed. It's now about 30% off that low that we saw just 2 weeks ago. I got to tell you, there's no great long-term stock. Amazon, Apple, Microsoft, you look at them over the last 20 to 30 years, however long they've been around, multiple 50% pullbacks along the way for every single one of them. So when you see great companies or what you perceive to be a great company, pull back 50%, and the factor could be whatever. If they change their business model, then get the hell out, or they're going bankrupt, get the hell out. But if it's just because of one quarterly miss or the backlog got a little lower, screw it. That's when you need to buy. That's when you make money.
Or even, like to me, like Taiwan Semiconductor and Supermicro, but like nothing changed at those businesses. It was just the indexes. Everybody panicked. Everybody ran for the exits. And meanwhile, joking, the CEO of TSM or, Supermicro are like, why is our stock selling off? We're still crushing it, and that kind of goes back to, if you like these companies and you miss some of these moves, you just have to be patient and wait for that. Cause to me, it's just a layup, it's like and again, people hate to wait, especially in this world. Okay. Like, people want instant gratification. That's why people love day trading. But if you want these longer term holds, and, and I think we even mentioned it a few weeks ago with that Warren Buffett quote, of the volatility, because occasionally, and I'm going to butcher it, but you could buy these great companies at an extreme discount for no reason. Like it's just because all of this panic, you go back to 2 weeks ago around the carry trade and all of this stuff. And now all of them are all the way back,
Again, it sounds so easy. And I struggle with it sometimes, even my own money. Like I see companies and they pull back, and I think maybe there's something wrong with it. But, I think volatility, I think the education piece I want to get across today is, when it comes to long-term investing or even long-term swing trading, which could be a few weeks, few months, however long you might hold them, depending on charts, volatility is actually not a bad thing, because it does give you an opportunity to enter positions, as Tim just discussed. It also, on the flip side, you don't have to hold the stock forever. When you have big spikes up, that might be a time to unload or sell half and then diversify and buy into something else, because you might need some cash. So you can really use volatility on both sides, on the pullbacks and on the rallies, if you do it right. What I do want to put out there, and I don't want you to do, is start thinking that you're suddenly a market timer and can time every time the market goes up and comes down, because that's much more difficult than it sounds. So I'm not trying to make it sound easy, but that's, let the charts tell you, but you can't be trading the whole account up and down like that. That's just too tough for the average person.
And that's why we kind of put together the podcast to have the two different viewpoints, because sometimes it surprises people when I always say, I mostly trade these crappy penny stocks. And sometimes people are like, well, why would you trade them? It's like, listen, I know what they are. Okay. I know what's going to eventually happen with all of these. And a lot of people don't, but that's the difference between day trading and something that, again, you like when penny stocks pull back, you get the hell out because they may never come back. But with these quality companies, it creates opportunity. And it's just kind of those two different approaches, because I know a lot of people, especially our listeners, are doing both. They've got their longer term investments, but they're also looking for the faster gains in day trade.
Yeah, there's nothing wrong with that. I think like even the day traders who do it, I don't say full time, but do it, as a consistent hobby, most of them still have some money long term. They don't put every penny they have into day trading. So you really have to have a little bit of knowledge on both sides. I mean, you don't have to day trade, but if you want to, I'm 100% behind it. But you got to follow somebody like Tim or somebody that's doing helping you with the research, because as easy as it may sound sometimes when we talk about it, it can go against you pretty quick too. So we need to, you need to have somebody there kind of teaching you. This isn't something you just pick up and start tomorrow. It's not that easy. It takes years and years of research and strategy and a plan and removing emotions. All shit that sounds easy, but it's not.
There's a reason are you familiar with Jocko Willink?
No.
Oh, oh man, my number one man crush. So anyway, real quick, Jocko Willink, he's a Navy SEAL.
Yes. I thought you meant a trader or something. Yeah, I know. Okay. Yeah.
Like he's often called the most disciplined man on the planet. Like he's just like insane. Okay. And the only reason I bring that up, because when people are getting into day trading, I always send them Jocko's way, because I'm like, listen, you have to be disciplined in this. You have to stick to stop losses, because one of the reasons that so many people get destroyed is, unlike these real companies that, maybe you can go through a dark period and they eventually kind of come back. When you're trading these companies, you have to follow that plan and have to be disciplined, because if not, you get destroyed. I mean, and that, unfortunately, that happens in so many people, because they start believing the hype and they fall for it, and they, end up at an MULN, like you said, that was trading at $9 million and is now trading at like 22 cents today.
Mm-hmm. Yeah, exactly. So yeah, I mean, I think, the only point I really want to get across here today was that volatility is here to stay, in my opinion. There's too many known catalysts coming up. As I mentioned, the Fed, the 2 crazy months as volume starts coming back in September. You see big moves, presidential election year. I just think there's so many things that could happen, and we don't know what's going to come out with the election and what kind of nonsense that's going to bring, and the uncertainty to this country and stuff like that. And then we have outside. We still have the Middle East going on. We still have Ukraine going on. We still have potential Taiwan, South China Sea. There's a lot out there, Tim, that can still, there's smoke, and when there's smoke, there's typically fire. So I think we will see some more 2% days between now and the end of the year.
Yeah, and one more I'd kind of like your opinion is, as we had, I mean, ultimately we're kind of stuck talking about the election. We're going into the end of September. It's going to be the number one thing, and it affects the stock market. It affects public sentiment, etc. So, unfortunately, and the listeners know, I mean, listen, I'm as pro-America as they get. But, I have concerns that as we head into the election, that more and more civil unrest, like who knows what's going to happen this week, et cetera. So, I mean, what do you think? Is it going to get uglier in the election, or kind of where are we going to be?
Again, I'm an optimist majority of the time, and I'm hoping it does not. I think cooler heads will prevail, and I think the violence and potential for disruption and protests that turn violent, it's such a small portion of our country. It's the extremists on the left and right that typically go out there and cause problems and tear down other people's homes and burn things and cause issues. So I think it's a small portion, but the problem is, you mentioned this earlier, the media. I was in the media for over 10 years. I saw the stories we ran. It might be a small story on one block in St. Louis, but we make it a national story. It's I mean the media. So I hope we don't get wrapped up into the nonsense, but I hate to say it, I think we will see some headlines come across that, if so-and-so wins, the other side's party is going to protest. If, both sides. I just think they're going to fear us into needing them more. the politicians, where we don't need shit from them. We need them to do their damn job and keep their mouth shut.
Yeah, I mean, exactly. So now that being said, one of the reasons I brought it up is, we've talked about some of these stocks in the past. We have this entire basket of what we call civil unrest plays. DGLY is one of them. There's a bunch of other names. As we keep an eye on those as we head in, if you start seeing these things pop off, much like the protection plays like APT and LAK, every time one of these big situations cropped up, those stocks start moving, and it's kind of this repeat name type idea. So,
yeah, I mean, it's very easy. What you can do is just make a little watch list, right, and call it whatever you want to call it, and check it every couple of days or whenever you log into your system. All of a sudden, you see all of them moving for a couple of days with big volume. You might think there's something going on, because a lot of times, the day or so after a big news story, we find out that there's big money coming into the stocks that moved on that. Somebody knows something somewhere. Put it that way.
So what's on your radar right now as we kind of take this home? So,
at this point, we're kind of wrapping up earnings season. So it came in a little better than expected on both the top and bottom line. I'm happy with that. I think now just turning my attention a little bit longer term to watch the companies that have come back from the kind of panic sell-off that we saw, see how they act. The good companies will come back quickly, and a lot of them have, and then start readying myself and my portfolio to position for the Fed cut, which is just over about a month from today, almost exactly. September 18th is the meeting, and today, so just a little less than a month away. And the thing is, it's a little different because this one's pretty much been telegraphed. We know that already. We've seen some sectors move, but 125 or 150 basis point cut isn't really what we need for a lot of these sectors. We need a prolonged rate cut cycle, which I think we're going to move into, at least into mid next year. So again, we talked about this before. In biotechs, XBI got crushed on that Monday. We're back above that level again. We're now at a 2.5 week high. You're seeing some of these that these sectors do well, and you want to keep an eye on it. So for me, for my subscribers, I'm now taking a look at all these and doing my top-down research and finding which stocks I'm going to recommend in different newsletters to tackle these big trends.
Cool. So yeah, the biggest thing I'm kind of seeing right now in the, more of the swing trade is a lot of these space-related plays. So we talked about ASTS when we did that watch list about a month ago. That stock just keeps breaking out, and then we've got some other plays.
Great call. Great call. I mean, it's up 3x, at least 2x, 3x since you mentioned it.
Well, the beautiful thing about that is for whatever reason, that's a stock that, and I track a lot of these accounts on Twitter and all these weirdos and stuff, but that's one of those stocks that for whatever reason, the entire short seller community has decided that stock is quote unquote up too much. So one of the reasons you just see it'll gap down and rip is because every day they're looking for that first red day, they call it, okay, that's going to trigger the sell-off. And you just look, and if you guys go back and look at the charts, every day for 2 weeks, it gaps down, goes back green, and closes at the high of the day. And it just happens over and over again. And it just reminds me so much of a ticker from a few years ago, which oddly enough was another space play, ticker symbol I, single digit ticker. It's actually delisted now. The shorts were right in the end, but not until they got screwed. But that was another stock. Literally the whole summer, it was the same type move. So that's what I look for in a lot of these is kind of these, not what I would call quality companies, but they got a good story. They got an okay business. But when you start seeing people do what I call guessing tops on the short side, is it creates that parabolic move since a couple weeks ago. And then it's also a hot sector because of Elon. That's why we're seeing SIDU running. So hopefully, we can get past this political machine and people start talking about the exciting prospects in the world and looking at optimism and interplanetary stuff and all of this cool technology that's out there. So I think these space plays are going to continue to run for quite some time. So
we got to get Elon home, back to Mars, baby.
Exactly. So, one thing I do want to mention, guys, we're gonna take this home. we asked a couple weeks ago, but we're working on that mailbag episode. We've got a bunch of great responses. There should be a link below, but also you can just shoot an email to info@SteadyTrade.com, whether it be longer term investments or what I see coming on the day trading side. Just shoot those questions over. We'd love to see them, and we'll cover them on those mailbag episodes. So that being said, my man, have a great day. And everyone, thanks for tuning in to the SteadyTrade Podcast. Shoot us those questions. Share the episode with everyone. We're really having a blast doing these and have a bunch of amazing comments. And we'll see you on the next episode.